Reserve Bank address there by Governor Lesetja Kganyago. And we've expected it, and analysts have called it 50 basis points. That's the increase on the repo rate. What does that mean? The repo rate, the rate at which the Reserve Bank lends money to other banks, that increases by 0.5%. What does that mean for you? Well, this thing called the prime lending rates just a few moments ago was 7.25% or 7.775%, I beg your pardon. The prime lending rate now stands at 8.25%, and that all that means is that your loan repayments would get higher, this time by a larger amount compared to the previous two hikes that we've seen. So Tony, that answers your question. We called it,
yep,
and you will be paying more for your loan repayments.
I like the way you said all that means. Many people are thinking, no, it's a big call.
Yep.
And the question coming through from one of the other journalists there is, are they being a little too aggressive? What's your take on that?
Well, I mean, the Reserve Bank governor would answer that question as he did today, and he normally does. They consider everything, all right? So the question was, we have such cash-strapped consumers here as it is.
Yep.
Growth is not taking off. We're coming out of COVID. Why give us that burden of actually paying more on our loan repayments? And the answer in many ways is that, look, if we let inflation get out of control, it's just going to worsen things on the ground. Price increases start elevating to such an extent that it makes it unaffordable for many people out there. There's global factors to consider. There's domestic factors to consider. I want to get a little bit more analysis on this. So let's check in very quickly with Chris Gilmour, economist, whether or not he's there. Chris, can you hear me?
I can hear you. Can you hear me, Devan?
Loud and clear. I was just telling Tony here that, look, it was a call. We expected a 50 basis points increase. And as we know, the Reserve Bank, in true fashion, they're not willing to waver on their mandate at all. I guess this was expected. We're going to have to deal with this 50 basis points increase. Chris?
Yes, absolutely. And look, listening to the governor, he handled it extremely well. He was very, very cool in the face of a global situation that is, and to use his expression, I think globally you're seeing inflation becoming unanchored or de-anchored, whichever you want to use. So he's trying to make sure that the same thing doesn't happen in South Africa. Now, South Africa, you've got a very different situation to the rest of the world. In the rest of the world, you've got, first of all, inflation is much higher in the US and the UK, for example. But secondly, it's caused by different things. It's caused by excessive demand, for one thing, in addition to the imported inflation. All we've really got in South Africa is imported inflation. Demand is pretty much dead. No matter what the governor says, demand is pretty dead. And it's going to be dead for 2022 and 2023. So that leads me on to the next bit. You know, I'm just a little bit concerned. 50 basis point is just going to flatten that economy even further without necessarily doing much to actually contain inflation.
But some might argue, Chris, that, listen, you might as well do it now than go on with those incremental increases forever. That in itself could play a huge sort of big negative impact on the economy. There was one question from a journalist that said, look, I mean, and I suppose it speaks to what you were saying. We're at a point where we're struggling with growth, we're struggling with jobs. Could you have given more consideration on that? But in true fashion, the Reserve Bank governor says we consider everything. I mean, do you think that was probably the right way to go? Because it certainly looks like the MPC probably thought a very similar thing that the Reserve Bank governor had thought.
Well, look, you're right. I mean, and you're looking at 4-to-1 in terms of 50 basis points for four of the members of the MPC, only one wanting 25 basis points. But again, I come back to what we're looking at in the Fed. You're looking at probably an increase in every single meeting that the Fed takes place. You know, and until the end of the year. You know, a lot of these central bank governors are very concerned about the de-anchoring, the unanchoring of inflation. And I suspect what's going to happen is that they may go overboard. They know full well what happened in the 1970s and 80s when inflation got out of control, and it took 20 years to bring it back. Now, that's the last thing you want to do. So is the governor doing the right thing? From an orthodox perspective, absolutely doing the right thing entirely. As I say, I'm just concerned that in so doing, the economy is going to be the loser.
Just very quickly before I let you go, Chris, I mean, he has highlighted a few price pressures here, right? I mean, the one being electricity prices, wheat prices are up. Oil doesn't seem to be going anywhere in the downward direction. He's made that clear. But the other important thing that he brought up here was the fact that government just doesn't seem to be investing. Our rate of investment is still in dire straits, and that spells bad news. When there's low investment, there's no jobs being created.
No, absolutely. I mean, if you look at infrastructure as a percentage of GDP, it's around about 12%. I mean, only Cuba I can think of is much less than that, at 11%. And they've had no capex to speak of since 1959. So that kind of highlights just how desperate the situation is. And you're quite right. The only problem, well, not the only problem, but one of the problems the government has is that it just doesn't have the wherewithal. It's up to its ears in debt now. So I think it has to try and persuade the private sector to come in and spend the money. Now, there's a lot of distrust on the behalf of the private sector. There's plenty of money to kickstart this economy, no doubt about it. But it's unlikely to come from government. So that's why I think President Ramaphosa is starting to kind of sweet talk government into doing an awful lot more. Because you're quite right, that is exactly what's required. Infrastructure particularly does create jobs.
Yeah, now we're going to have to leave it there. Well, thanks very much indeed. Chris Gilmour, the economist, talking to us about that interest rate hike there. And just a reminder, the interest rate to the repo rate rises by 50 basis points. It now sits at 4.75%. The prime lending rate in banks is now 8.25%. I mean, not what we want to hear, but I think we called it before this. It's inevitable. It did happen. We'll have to see how the broader industry reacts to this, Tony.
Before I let you go, I need you to explain something from a headline inflation. That's a term used by you guys all the time.
Yeah. So the headline inflation is the big number, the overall number, which is sitting at 5.9%. And the core inflation is that number which excludes food and fuel costs. So the headline inflation number is really the number that you would find on the top of your screen. And that's sitting at 5.9%.
Yep.
Remember that the Reserve Bank has a target. Anything outside anything between the 3% and 6% headline inflation, that is 4.5%, that's acceptable. When inflation gets too close to the end of the band, 6%, that's a problem. And what is it sitting at now? 5.9%.
Okay, so hence they stepped in. All right, Devan, thank you so much. Fantastic stuff. I've learned a little bit more today, as well as the fact that my bond is going to be a lot more.